Hi, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. Just this week, you've probably ordered food from your favourite restaurant or fast food place with a service like DoorDash, Seamless or Uber Eats. Today's stock is a competitor to these and they are about to go public. Now, we are probably all familiar with the underwhelming Uber IPO, but Postmates doesn't come with the baggage of debt that Uber did. Founded in 2011, the company is able to deliver almost any good to your doorstep in under an hour. Whether it's a milkshake or a MacBook, they have got you covered. In January 2019, Postmates raised $100 million from BlackRock, Spark Capital, Founders Fund, Uncork Capital and Slow Ventures, some seriously big names, and are now valued at $2.4 billion. Now, this is a more sensible valuation rather than the tech multiples that have been apparent in this market. Uber, for example, makes no profit, yet has a valuation of close to $50 billion, a fall from grace from its IPO valuation of $75 billion. However, there are some concerns. Postmates has just undergone a recent funding round, and needing this so close to IPO could cause jitters. Like Uber and other delivery firms, they are not yet profitable. So naturally, this is not so much of a worry as unicorns spend so much of their early years dedicated to land-grabbing activities. Worry is still there, however, as their model is yet unproven in terms of how this type of firm can turn a profit. This is mainly because initial startup costs are so capital intensive. Nevertheless, Postmates has tried to diversify its offering. While Uber Eats and their competitors in this space are primarily focused on larger chains, Postmates has decided to cater to both large and small businesses. The SME space plays such a large part of US consumer buying that it makes sense to focus on smaller firms and be the convenient bridge between producer and consumer. However, Postmates has delayed its IPO, and it's important to understand why. It's for a good reason. They think that this market is atrocious to go public in. Market watchers believe we may be experiencing the euphoria phase of the market cycle, and this is not good for a firm looking for sustainable growth, as investors are getting involved on a fear of missing out and something new and shiny basis rather than investing from a place of logic and reason. We must also pay attention to the valuation that book runners are giving on the deals in this market, especially in a space where we haven't seen a huge amount of share price growth so far. All in all, we think that Postmates could have a good IPO when it does eventually go public, so long as the overall market context is beneficial for the stock. Definitely keep this one on your watch list and continue to do your due diligence. That's all for now. Join us next time.